Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, on this wonderful Wednesday, or a worrying Wednesday, depending on whether you're focused on short-term price action or you've got that broader picture in mind, which we try and implement here on the channel for another jam-packed daily market update. Of course, we are going to be addressing the current price action. I think it has a lot to do with sort of macroeconomic data coming out. Obviously, today you've got FOMC, which is where Jerome Powell's going to sort of lay down his forecast for the largest central bank in the world and what he's planning to do. And the markets, of course, are going to react to that. And I think there's been a de-risking going into this. And unfortunately, with the crypto space, it's volatile inherently. And what you get, in fact, I think yesterday you saw one of the largest liquidations Binance had ever experienced. It was about $17 million from one trader got liquidated on an ETH USDT long. And when that liquidation happens, they become forced sellers and there's a cascade. They're ding-dongs. Any ding-dong playing with leverage when it comes to the cryptocurrency space, you deserve what you get, unfortunately. You're going to make more than enough money through being an investor and focusing on that big picture. But when we have sort of economic events like what we've got a lot of this week, ISMs yesterday, there's lots going on. The jolts. Today we've got FOMC. Friday we've got non-farm payroll. There's going to be a de-risking because smart traders won't basically gamble on a positive outcome. So we are going to be talking about that. We'll be looking at the Bitcoin price chart. We'll be looking at a couple of altcoins in regards to price action. Where I want to start though, because I do think it's a wonderful Wednesday, is with some positivity. And positivity coming out of what Trump had to say yesterday. We've got two clips. One of them is him talking about interest rates and inflation. The other one is him talking about tax cuts and how they're going to slash regulations and boost the economy. And I think this all ties in with our big macro picture and certainly the direction we think the cryptocurrency space is going in. And then we'll be looking at a post from Brad Garlinghouse talking about FOMC and a number of other things, really bringing it all together, which is what we like to do in these daily market updates. So without further ado, let's dive into clip number one of Trump talking about interest rates.
We are inheriting a difficult situation from the outgoing administration, and they're trying everything they can to make it more difficult. Inflation is continuing to rage, and interest rates are far too high. And I've been disappointed to see the Biden administration's attempt to block the reforms of the American people and that they voted for. We had a landslide election. We won every swing state.
Interest rate cuts are coming, according to Trump. Certainly that's an agenda of his. That should be good for the markets because it makes money more free flowing. The cost of capital is reduced, and that means you should see it come back into the markets. And actually more deeply, and we don't want to spend too long on this because it's quite a big topic. The question is, okay, well, how do they lower interest rates where bonds are where they're at? Bonds are really getting hit very hard. If they lowered interest rates, that would essentially make bonds less attractive because they'd get less of a yield, which would, you could argue, mean that they would sell off even more, which would really put pressure on the entire financial system. It kind of begs the question that actually Trump's sort of cabinet or Trump's office might have to suggest the Fed stepping in once again to the bond market, which they've been continuing to not do. And of course, later on today, we are going to get some clarity on what Jerome Powell is expecting to do. You can see at 7 p.m. UK time, we do have the FOMC meetings minutes. We'll be streaming it for you guys. Don't worry. We'll also likely be talking about a lot of what took place the day after. And I think with this important macro data, really you've got a de-risking when it comes to the cryptocurrency space. However, I want to say this, do not feel Allincrypto's here. The macro picture is still very much intact, despite us currently going through a pretty interesting pullback. We're retracing a lot of the gains that we've made since the start of the year. But ultimately, this is part of markets. The ebb and flows of markets are from a day-to-day basis, I think largely should be ignored. Yesterday's data that we got, which was, of course, ISMs, and you also had jolts, the real takeaway from me was what we essentially saw with the yield market. If we dive down to yields, we'll go onto my watch list. Where are we? We don't go on portfolio. If we go to yields, you can see yields actually really started to rally. And of course, this has caused the dollar to gain some strength, which is broadly leaning on markets. The dollar really is a risk-off trade. Bonds are continuing to get hit. And it's interesting when Trump says he wants to lower interest rates. Well, can they do that with the bond market in the kind of position that it's in without doing some sort of a stimulus or revival of it? And actually that ultimately means a lot of liquidity. We've got another clip to share with you before we dive into a post from Brad Garlinghouse. We talk more broadly about macro data, and then we dive into the charts in more detail. And that is, of course, about Trump talking about tax cuts. And he's previously said actually he's going to be very favorable towards cryptos that are US-based. And there's been speculation that there'll be no taxes in regards to capital gains for people that make money on these cryptocurrencies. And that's one way of them incentivizing individuals to launch their cryptos in the US and certainly the US investors to hold cryptos. We'll see when that comes to fruition. As of right now, it's not the case, but we'll see moving forwards. So let's dive into clip number 2.
Working with the Republican majorities in Congress will cut taxes, slash regulations, raise wages, and boost incomes at a pace the world has not seen before.
That, of course, was a shorter clip, but again, talking about cutting taxes, I think this is ultimately beneficial for the economy as a whole. But then again, cutting taxes, we saw with Liz Truss in the UK. I think Liz Truss was actually right about many things. I know a lot of people don't agree with me on that, but that's just my own personal stance. We're not enemies because we have a difference in opinion, and actually we should be able to have a debate. But if you're going to cut taxes, actually that typically has a negative effect on the bond market. So cutting interest rates, cutting taxes, both should be negative on the bond market. There's going to have to be some sort of support that comes into it. Now, whether that comes from the markets or governments is still to be seen. But with everything going on, you can imagine that the poor little crypto space, which is really at the bottom of the sort of food chain when it comes to, certainly the altcoin sector is barely showing up when it comes to markets, is really getting thrown around like a paper bag in the wind. But the important thing is that broader trajectory that we're on. We've done so much work on a daily basis here to sort of cover all of that. Let's kick things off with a little bit more positive news. This is from Brad Garlinghouse, CEO of Ripple. Great dinner last night with Donald Trump and Stuart Aldultry. Strong start to 2025. And I am very convinced of what XRP is going to achieve. And actually, we are long and strong XRP. And I think broadly, this is really just a shakeout, in my opinion. And I don't think you want to play into it too much. Yes, it's brutal. Certainly, if we drop down to the daily, you can see this was a sort of this has been a period where you've been consolidating. We dismissed the sort of inverse head and shoulders. You obviously rallied and sort of invalidated certainly this right shoulder, but since then you've started to sort of sell off somewhat. And actually, this is all this consolidation is happening around certainly first bull flag target, non-coincidentally, because technical targets do often become key levels of significance. I ultimately still think this is going to set up for broader continuation, and I think the sector as a whole is actually in a really good space. But we do have a lot of data coming out. So this was yesterday, the 7th of January. It's currently the 8th of January. We've obviously got the FOMC minutes. Things to look out for are further guidance on interest rates. I don't think Jerome Powell is going to reiterate what Trump said in terms of bringing rates down and tax cuts and things like this. The really important thing is what are they doing with the bond market? Are they still rolling off their balance sheet? Are they going to stop doing that? Are they going to look to add if needed? That question on the bond market is ultimately going to very much be front and center to not just the crypto story, but the market story more broadly. And actually, we have done a video where we looked at the stock sector, the stock market broadly, which sold off yesterday in line with risk, obviously on the back end of all the uncertainty around this data. But we have looked at the stock market. So actually, we think it's certainly the big stocks look like they're in good standings, and smaller stocks don't look too bad either. Just like altcoins, really, in regards to what's likely to come. So we're still very confident on the macro picture and the fact that we believe we've got that right and what that's going to mean for the markets. Unfortunately, guys, with crypto, this sort of price action is inherent. It sucks. Everyone's a little bit more down in the dumps when it happens, but it's all about perspective. Do you have that broader time frame view on where this market is going? And if so, as an investor, you stick to that? Or are you trying to trade this market like a ding-dong? You're not traders. 99% of people that come into the crypto space are not traders. They want to be traders because they get sold this dream. 99% of people on Twitter that have hundreds of thousands of followers that claim they're traders are not traders, guys. Be an investor in what is fundamentally in my opinion, and this is not financial advice, but a sound market, and have that broader time frame view Remember, we've looked at Bitcoin's technical targets, the total cryptocurrency market cap's technical targets, ETP technical targets as it relates to crypto, etc., etc., etc. I mean, there's not much we've not covered in regards to technically looking at charts and actually giving our broader view of it. And actually, the stars are truly aligning, and we think it's just a case of hanging in there, being able to weather the storm, not letting it get you down too much, and ultimately seeing that brighter days are truly ahead of us. We've already seen the sort of start of that with some altcoins. Some of them went up 700%. They're giving a little bit of it back. Have that bigger perspective of the fact that you're up 700%, you're giving some of it back. We've got the next rounds to come, in our opinion. You don't want to sort of use all your energy up in the first couple of rounds. You know, we've got 12 rounds or so to go. And this year's going to be a big one. That's it from me, guys. I'm going to love and leave you. Thanks for watching. As always, let me know your thoughts about what Trump had to say in the comment section. What do you think about the bond market? If you've got any thoughts on it, of course, it's going to be a major fundamental driver to the markets more broadly. That's it from me. See you soon.